Ladies and gentlemen of the crypto space, we're live on a Tuesday at 11:34 a.m., May 25th, the start of the week. Hopefully, this is going to be a better week than last. Um, we understand what occurred. We understand why it occurred and how it occurred. We questioned was there intentions of large scale parties that had a capacity to put pressure, financial pressure on the markets, and that's mutually exclusive from the actual sequence of events that played out. And that's meaningful because that's it's conjecture at best. We do not know. We do not have definitive information suggesting that is what played out. So, in that regard, it's irrelevant. What's pertinent is we understand what played out. And the question we're all asking ourselves now is if this is a bear market, what part of the cycle are we in? Has the cycle changed? Has the story changed? Has the narrative changed? And this is a season of twiddling our thumbs where conviction is put to the test. And it's not easy. In many regards, I'm looking at charts, and I believe that the appropriate thing to do for myself may not be the appropriate thing to do for everyone else. And there's obviously opportunity to capitalize on buy low, sell high trading methodology. There's plenty of reason to think with a long term time horizon that having uh, a solid, precisely chosen and crafted portfolio over time will realize everything you're envisioning. There's a lot of thoughts that can be applied to these markets, and it's long term, short term, and risk is involved, and conviction is tested, and that's where we are. This is Twiddle Our Thumbs season, ladies and gentlemen. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Winner in Training's in the house. The great Dasby's in the house. We're doing better. Well, that's all I could ever hope for. At least to be aware of risk, at least to be aware of choices and options, and all the fabulous catchphrases I've said over the year and a half or so. Can't go all in, can't get spread too thin. Nice, precisely chosen portfolio. Maybe only a couple of assets. You don't really need that many assets to be exposed to the market that you want to be exposed to. And really, it's red herring to try and make as much money as possible, and that sometimes leads people in the opposite direction, taking on excessive risk with small startups, small projects without reputation, small projects that, sure, many of them are quite viable and they're trying to make a name for themselves, but there is risk associated with untested, and in by testing, in some regards, I mean scale and how much it has grown. The amount of billions of dollars on Aave, it is a tested platform. The amount of billions of dollars on Curve, it is a tested platform. And having a tested platform and allocating a large part of your capital to it is much more meaningful than allocating a large amount of capital to a risky, untested platform. And that is just brutal. And that creates anxiety. And that's no way to engage with these markets. These markets are too interesting. And these markets are filled with too much opportunity to take excessive risk. Uh, there's literally no opportunity left in the legacy financial system. I have absolutely no capacity to extract value whatsoever from legacy equities markets. It's not possible. It's not possible for me. I don't have the tools. I don't have the information. I don't have the ideology. It's not part of any framework that I could think of. It doesn't fit into the stories that I can tell why assets I can have belief in and I feel should appreciate. And I don't see any opportunity. There is so much opportunity cost in the legacy financial markets that I can't allocate value to them. Now, that folks could take that for what it's worth, not necessarily folks on the stream, but we're talking about like legacy financial folks that literally have fear and doubt in these markets, these crypto markets. They're just, I don't know what kind of wavelength they're operating on that they see opportunity in the legacy financial system. Who in their right mind is buying tech stocks? I just can't understand it. So that's really why I'm in these markets and why I have the conviction that I have and why I tell the stories that I do, because these are the markets that not only interest me, these are the markets that are rational. These are the rational markets. These are the markets that make sense. This is the technology that makes sense. I can't think of a single business enterprise that I find interesting. I have a Tesla in the garage. I want solar panels. I want various engineered products. I want computers. I work on Apple machines. I would never want to own the company because I don't find what they're doing interesting. All right, make me a new computer, Apple. Am I impressed? Is that impressive that they made a new computer? Is their cash flow and their business impressive? Not to me. It's just not exciting, nor interesting, nor innovative, nor impressive, nor something that I want to attach my capital to. Legacy financial folks would say that you want to attach your capital to cash flow and dividends. That's exactly what we're doing. I target assets in the crypto space that are specifically aligned with that narrative, but in a much more interesting way than a business enterprise. That I just that's just my that's a period. That's my statement. My narrative talks of cash flow in the crypto space. We talk of critical mass liquidity, where we talk of the developers creating reasons for persons to move capital. And then we talk of money markets that facilitate lending and borrowing which manifest monetary velocity. That is so much more interesting than anything I could think of regarding a business enterprise. We're talking about financial markets. We're talking about the same properties that we measure against M2 money supply. Velocity. Velocity, ladies and gentlemen. The same phenomena that makes the legacy financial system work is exactly what we're allocating value to. That's what Ethereum is. That's what Matic is. And now our eyes are on Arbitrum also, and the effects that will have on these markets. That will change the story, and optimism will change the story in the L2 solutions. And the odds are, I expect those protocols to change the story for Ethereum 2.0. It's my expectation that we go to Ethereum 1.5, wham, bam, and done. They're going to do the sharding, they're going to do proof of stake, and they're going to solidify and hunker down and use the base chain for what it's good at. It works in its current form, but the L2 solutions are just much further ahead. They're much further ahead. Diversify, loop ring, optimism is going to spread across all these protocols. Arbitrum is rolling out. We're going to know more on Friday. And Matic has just been on fire. All the capital inflow into Matic. It's the first network that has critical mass liquidity followed by critical mass monetary velocity since Binance Smart Chain. And Binance Smart Chain, I have no interest in the technology. What they built was nothing innovative, nothing unique, and they didn't attach themselves to the prevailing narrative. I find it distasteful that they departed and didn't work synergistically from the current, or at least the infrastructure that has created roots, which is Ethereum. Why would you do that? So therefore, I have no interest, and it makes me happy that at least that Matic is above Tron. That's in the same vein. It's the same exact sentiment there. At least the intentions of Polygon are to interact with Ethereum and to bring things together and to work together and to form and create synergy. And that means something, ladies and gentlemen. It means something when people work together instead of trying to necessarily compete. Working together always produces the more powerful, more meaningful results. I missed all your intros, guys. The Great Datsby's in the house. Jay Nice Mint, always a pleasure. Bears and cows, Jay Nice. Wave Mapper, hey Noah, hope I'm doing well. I'm okay today. Tired, but busy. Barry's in the house, always a pleasure. Sunny, good morning. Brooke the captain. Where's Captain Weber? He's the captain. Squatchy speaks. What's up, Crypto fam? Hope everyone is doing well. Jay Nice, BTC, Matic, DGB. It's final. Set in stone. Locked in stone. I promise you, my friend, nothing's ever final. Jonah, hey Noah, is the Aave pool on Curve Polygon the best bet for stablecoin yield right now? Well, the Curve pool is throwing out 38%, give or take. That's pretty cool. That's where I park cash. So I was nervous overnight. I parked cash in Curve overnight, and I'm currently deployed. I wish Aave looked a little bit healthier. I mean, ETH and Bitcoin are still under long-term moving averages. Matic is currently holding above all long-term moving averages and is hovering around resistance of this bull flag. So this looks to be the strongest thus far. I mean, for the last like 2 weeks, for the last while, hasn't Matic been the strongest? So right now, I have an even split between Ethereum and Matic, and slightly less for Bitcoin. I work in terms of collateral assets. If an asset isn't collateralizable, it doesn't mean anything to me, unless at least unless from a risk-on perspective. I have a couple of small gambles across the board. Everyone knows, and they've been set in stone. Literally, those assets haven't been touched in probably about 6 months to a year at this point. Interestingly, so the vast majority of capital is allocated to collateralizable assets because those are properties of financial primitives. That's what bonds are. You buy a bond, nobody gives a shit about the interest rate right now. I don't care what institution you're talking to. They're not getting anything for their money. So what do they buy the bond for? Collateral, so they could borrow against it. So therefore, these assets that we're applying value to that we could borrow against have extremely similar properties to bonds with regard to their function in a balance sheet. What do balance sheets consist of? Balance sheets consist of cash, debt, and bonds, and liabilities at times. If you take on debt, you have a liability. But that's what a balance sheet is. So put the balance sheet to work, operate the portfolio like a business, and buck the trend and do things differently. So who's up for buying stocks compared to operating a portfolio like a balance sheet? These schmucks out there throwing stocks in a portfolio. Ooh, I'm going to buy it low and sell it high, and I'm going to have no idea what to do with my capital. That's the point. That's why a balance sheet makes so much sense because stocks are stupid. These stocks and companies, the whole point of them, they were created for governance. So you could vote on what the board of directors chooses to do. Or whatever, however their hierarchy is established. What are we doing in crypto? What are we doing on Curve? What are we doing on Bancor? What are we doing on 1inch? We're voting. It's the same thing as stocks, same things as bonds, has properties of currency with inflation, deflation, and velocity. You could use it for payments because you can extract capital really easy. The payment rails for capital inflow and outflow is trivial at this point. So you have the properties of literally every single major function of the legacy financial system baked into digital assets that you can store in a hardware wallet, and you can bypass the banks. So that's how I find my conviction. Everything else is literally stupid in comparison. How about that? I get a little emotional at times, boys and girls. Mark, hi Noah. I love your content. Did you change anything in your portfolio after the correction? Thinking you're looking. No, I'm looking at markets identically. We're going to have some adjustments this week. Nothing significant. I still look for collateralizable assets. I was able to capitalize meaningfully At one point, it was a large depreciation for myself, but as of yesterday, I was able to recoup a significant amount of the portfolio, putting me back at really much a portfolio that was about a week or two ago. And that's nice. Now it's not so nice because it's down about 33% from all-time highs, but that all-time high was irrational exuberance. Um, and that, you know, I'm at portfolio balance of literally a week or two ago. So time horizon is just a critical phenomena to be processed, and it's very difficult really to digest because it's outside the scope of anything we deal with on a daily basis. Human beings operate on a second by second time frame. And if we were thinking in like a month, a week, a month, we still have to go through all those seconds. So it's really, really hard to try and contemplate what a long-term time horizon or even a mid-term to short-term time horizon means. So let me zoom out a little bit. This is a massive, massive flag because it's a 100% flagpole. And for what it's worth, markets look good. I mean, Matic looks the strongest as long as it holds above its long-term moving averages and is riding this damn resistance into support. That's wonderful bullish confluence. Ethereum is still under the gun. It's below the 200 EMA and 200 SMA on the 1 hour, and on the 4 hour, it's even worse. It's below the 50 S. It's below all the long-term moving averages. That has not dissuaded for me from reestablishing positions this morning. I try and not trade too much because very expensive with slippage. 1, 2, 3% really adds up quick. Um, Ave just got hammered. It's still at 50% down. There's been no appreciative movement. It's below moving averages, and Bitcoin as well. Uh, that's nice to see it bouncing off. What is that? The 100, or the 50? Look at that, a 50 SMA cross of the 100 SMA. That's nice to see. But if you zoom out, what we really need to do is have some serious upward movement. It's nice to see. So we're up to the 1 hour, starting to see some bullish crosses of the shorter term moving averages across longer term moving averages. But we still have to get there on the longer time frames. The 50 SMA, we're still below it. Guppies are red, short term moving averages. What you want to see here on the 4 hour, probably in the next couple of days, is the 50 SMA start to cross the 100 SMA and dare and rip the 200 SMA and the EMA, and now you're heading in the right direction. So Bitcoin, Ethereum, and Aave are under the gun. Matic is looking strong, which is nice, and Polygon is the place for capital at this point. That story. It may change, and when and if it does, we adjust accordingly. But I don't think that critical mass monetary velocity goes away. That's momentum. And that draws in capital for opportunity. It's a fraction of a penny for a transaction on Polygon, operating with the exact same DeFi platforms that he operated on L1 to manage your collateralizable assets. So you could do the exact same business. You could run the exact same business on Polygon that you can on base layer Ethereum for fractions of a penny. So this is the place to operate for now until there's a better place. And even if there's a better place, that's just another place. There's synergy. There's nothing wrong with having a shopping mall of choices where to allocate capital to. These are all nascent systems. They only have a couple $1 billion in them. Baby time. This is all tiny stuff. Dr. T, morning from the Pacific Northwest. Sounds that you may that sounds like a very appealing place. Something about Pacific Northwest makes it sound good. Although I got palm trees outside, so I shouldn't be complaining. I want to know what's happening next. Still in pool? So no, I am not. And that doesn't mean a pool position isn't a bad thing. Balancing between Matic and Ethereum is a great pool position, yielding a lot. Let's see what the yields are at. I mean, talking about 196%, which is probably 100% base and then 100% incentives, give or take. I don't think it's split down the middle, but point being, that's a massive ROI. Now, obviously, the complexity is if Ethereum starts to rip or Matic starts to rip, the impermanent loss is triggered. In which case, a potentially viable and considerable strategy is to hold the position while everything is flat and you exit the LP position when you start to have an imbalance, and that'll capture the impermanent loss. And this is what makes me really have a fancy for Uniswap v3. I can't engage with it because I'm not going to Ethereum L1. I'm not spending that gas money. I'm just not doing it. But that concentrated liquidity concept where I could say, hey, swap back and forth between Ethereum price range and Matic price range, that's wonderful. And then if it exits that price range, it's like I'm not in the pool, and I will capture the impermanent loss or prevent the impermanent loss, so to speak. So I'm liking those tools, and I want to use them. I'm just not willing to do that on Ethereum L1. There's too much opportunity cost. I'm not spending that cash. I'm not going. I'm not doing it. So that's where I'm at. That's where I'm at. Let's keep it going. Sonny's in the house. Bitcoin, Matic, and Aave rule. A little bit of method. Well, risk on. I have my risk assets. I still have XDK, Visor, Method, and Mist. You know, tiny 1/4% of the portfolio, probably even less at this point. Because the rest of the portfolio has outperformed so much. Those assets have been hammered. Meanwhile, Matic is up like whatever. It ripped 100% yesterday. It was up 150% at one point. Crazy. Wave mappers. Noah is really hard to get people to think this way instead of speculating, especially those new to the market cycle, which is exactly why I provide financial planning services to the best of my abilities, telling any new entrant, if you want to be in the crypto space, please use cash. Cash. Stop buying assets. Stop taking risk. Don't be degenerate. Stop gambling. You could literally take cash and put it into Aave, and it's better than your bank account. Start from that perspective because that alone is better. Because once you get cash in the, you're still going to have to figure out that's not easy. That is a very difficult process for someone new to crypto. First, you're going to have to transfer cash to something like Gemini or Coinbase. You're going to have to convert it to like USDC or DAI or GUSD. Then you're going to have to figure out how to use DeFi, which probably involves a MetaMask. And you're not going to want to use MetaMask unless you're using a hardware wallet. So now this new person in crypto really should get into a hardware wallet to connect it to MetaMask to do DeFi properly. Then they're going to be like, whoa, it costs $50 a transaction on Ethereum. So they're going to be pretty pissed off at that. And so there's a huge amount of boundary to engaging with crypto banking. It's a bank at this point. If it walks and talks like a bank, it is a bank. So if anyone is asking you what to do, new people wanting to get into crypto, for the love of God, don't tell them to buy anything. Cash, dollars. Sure, you have the whole conversation about what a stablecoin is, but that's besides the point because the risk associated with a stablecoin like DAI compared to a guaranteed, 100% guaranteed loss of capital, keeping your money in HSBC, Wells Fargo, Chase, what have you, I'll take a small risk compared to a guarantee any day. A guarantee that is the most meaningful argument I could possibly think of. You are guaranteed 100% to lose money in a bank account, no matter what you do, no matter what you want, no matter what you hope. So wouldn't anyone take a risk to not lose money? And we're not even talking about a risk in that the price goes up and down. You literally are turning dollars into crypto dollars. The price is going to stay the same, and the risk is the protocol and the infrastructure and whether this whole thing heads in the direction we're hoping it's heading. But you're going to get interest. And there we talk about curve where you can get 38% on your dollars. So anyone who's new to this stuff, you're not buying stuff. Dollars. Dollars. Prevent people from taking risk, please. Demir. Hey, my man, I was just coming off a hot topic. I'm like, Demir. My man Demir. Dead cat or bear asking for further positioning. There's no way to know. I mean, what? Well, here, look. This chart actually speaks volumes. So let's zoom out to the 1 hour, get a little bit more perspective. So we had our massive irrational exuberance. Check this out, and I really think this tells the market. This is a falling wedge, bullish. This is a fake out breakout, bullish. This is a bull flag, bullish. Three bullish patterns. Sure, it fell 50%. That still doesn't negate the fact that this is a bullish pattern. It broke out into a bull flag. So, I'm just saying the market could do whatever it wants. Markets don't do anything that we want them to do. They go up, they go down, they go left, they go right. They make your hopes and dreams come to life, and then they shit on them the next day, which is exactly what happened over here. We'll never know what's going to happen. So the whole argument that we have for us with ourselves, and we're going in and out of positions, and we're doing this, is fear and emotions and risk and conviction, if we could find it. Conviction is nice because then, if you're still nervous and you still have anxiety, then that's not conviction. So you have to find peace with what you think has purpose and meaning in the world. And for me, these types of assets give me a great deal of purpose and meaning. They help me understand, at least have faith and hope that, that, that there's people out there that actually care about new and different and better. Because buying a stock has nothing to do with new, different, and better. Uh, Vogue says, do you know why the realized APR in Matic, WL2, and Polygon Sushi is so smaller than the APR as reported by Sushi, even VFAT? Well, the reported APY here is just fine. This is a combination of the base APY, which is transaction fee revenue, plus incentivized returns. So what you're seeing here is transaction fees. So you're getting the compounded APY. And notice that they did it right. They're not saying APY or APR because technically it's a combination of APY and APR. Base APY is compounded. It's transaction fee revenue. It gets automatically redeposited to the pool. And then APR is your incentivized returns, which is not auto compounded. You actually have to claim it. So I would argue that's income. So if you have enough money and you have your capital in these types of positions, you literally have a business. This is market making. This is automated market making. This is equivalent to being in the 1980s and having a vest on and throwing flags on the New York Stock Exchange, except you're sitting at your own home and it's doing it automatically for you. Do not glance over that. Don't glance over that. Don't let anyone tell you any different. This is a business right here. And clearly, you need enough capital to make the business actually worthwhile. That's another story. Mark's in the house. What's up, Noah? Greetings from the UK. Ooh, after early evening for you, my brother. Vogue Sushi saying 170%, VFAT saying 39. It's probably 39% incentivized returns and more returns for the base APY, or vice versa. That's the whole point. Efficiency. I was looking at Matic Curve, and there is no interest on Matic. I think it was like Tether and USDC. I'm not following. There's quite a lot of yield available, facilitated by transaction fees and prevailing incentives. Darius Sanchez is in the house. Hi Noah. When I borrow Ethmatic from Aave and put them into Ethmatic LP on Sushi, am I risking losing my initial borrow amount? You are taking maximum risk. That is a leveraged long position. If you well, actually, that's actually not a bad idea. I've been borrowing cash this whole time and either going to Curve or cash and maybe purchasing like Ethereum and balancing in Ethereum USDC right here for 170%. It's not the worst idea actually for a Matic F borrow and throwing it in the pool for 196%. Anyway, it's not for me to make suggestions, but you just mentioned something that caught my fancy. when I talk interest in positions, I'll take a position, I'll exit the position, I'll do something else. There's no such thing as the right position. All there is better. You'll end up choosing and flip flopping and moving stuff here and doing stuff there, and you go back and forth and left and right and all over the place. There is no perfect way to do this. You will never find perfect. There is only better, and we can do better. Jay Nice is in the house. Quantified morning cap, hell of a week. Just when you think you've nailed the narrative, Arbitrum. That's right. Well, nothing has changed thus far. We don't have enough information to make rational choices. It is interesting, and I look forward to more information. You should try Radium on Solana. No interest in Solana at the moment, my friend. Eyes on, though. I'm eyes on for critical mass liquidity. How does these assets that have literally no liquidity and no monetary velocity have the market caps they do? I mean, Cardano has no liquidity. There is absolutely zero capital on the platform. There is zero monetary velocity. Solana has trivial monetary velocity and zero liquidity. Phantom has Phantom is probably one of the more interesting ones because Curve is on there. So the of the platforms that are available, really, Phantom is probably next on my list. That's interesting because Curve's there. It just needs Aave, and then bam, Arbitrum's on my list because that's going to change a lot. I unless it has critical mass liquidity and something that's heading down the road of monetary velocity, I have literally no interest in it because I can't do anything with it. I can't do anything whatsoever with Cardano. I can't borrow against it. I can't collateralize it. I can't do anything with it. It's non-functional. RJ, hey Noah, how do we establish the value of the Matic token given gas fees are negligible? All functions of the network remain. So you're talking about deflationary pressures and whatnot. So it's quite a different um, financial, from an economic perspective, inflation, deflation, so on and so forth. What I know is it's collateralizable, so you can borrow against it. So it has properties of a bond. That is meaningful enough to me. Deflationary pressures are what's important to prevent debasement, especially in the face of inflation. In the face of inflation, assets can still appreciate significantly. Hence Bitcoin. Bitcoin is a decaying inflationary asset. It's disinflationary. It has decreasing inflation over time, but every day there are more and more Bitcoin for the next 100 years. So what matters is how that circulating supply gets consumed and disrupted. And the fact that you could collateralize Bitcoin and Celsius and BlockFi, not that I would ever use them again, but in WBTC and RMBTC, it disrupts circulating supply, which means they're not being traded. And that's meaningful. So that's a good part of how to look at these assets. They got to be collateralizable. They really should have a deflationary pressure, which collateralizability offers. And burn components, I mean, Kyber and Bancor now have burn components. Kyber was one of the original tokenomics that had a burn component. Synthetics has a massive amount of incentivized supply disruption. I mean, the list goes on, and Curve arguably has the best monetary policy thus far that DeFi has created. FM Alexander, how can Pulse Chain become collateralizable? No idea. I don't even know what Pulse is, my friend. I'm sorry. Dirty Sanchez, thumbs up. Yes. Good thought. That was a good one. SS. Is there any significance of Bitcoin options expiring on the 28th? Only speculative. Peter Lee, great session today. It was a good one. It's always a good one. It's a good one every day. I sold my Matic at 86 cents. Left myself. What is it at right now? Is it ripping? No. Oh, yeah. I'm sorry. $1.70. Okay, so it's not easy. I don't have. I know it's painful. You're not dumb. You were nervous and you had anxiety, and there's risk, and it's hard to play these markets. So don't think that. Don't think that. And I guarantee you someone did worse, and a lot of people got hurt by these markets. because emotions are strong and fear is even the strongest. Learning how to invest cash just as hard as buying crypto for newbies, how to learn to do so, how to understand permanence and respond to. Don't worry about it from a cash perspective. Take your cash and throw it on Aave. That's it. If you until you understand these markets, experimentation. And when I say take cash and put it on Aave, I don't mean take your freaking bank account. I mean $50 and figure out the buttons. You got a lot of learning to do. There's a lot of buttons to click. There's a lot of websites to know. There's a lot of things that you need to get comfortable with, including anxiety and uncertainty. And you got to be confident in what you're doing. So literally, again, as I started the stream, for new crypto entrants, the first thing to do is nothing but experiment with $50, because $50, if you go to take a lesson or a class somewhere, it costs you like tuition for a class. So take $50 and take a learning lesson, a trip down crypto lane, and you throw $50 and you figure out all the shit you need to do to start getting capital into this. And once you throw cash on Aave and you start seeing interest come in real time, every second of every day, interest comes in, you're going to realize how stupid banks are. Is there any value of holding native BTC or leaving well, it's opportunity cost. It's unworking capital. Um, food for thought. And I cannot have a portfolio that's not working. I believe that that's the biggest missed opportunity that of the DeFi space. But other people have risk and anxiety, and that should be respected. And spot BTC is wonderful. Hold your Bitcoin on a ledger and protect it and put it under a mattress. And I have family that I tell to own Bitcoin, or I suggest, or I recommend, or I say you should have some Bitcoin. And they're not in DeFi. They're not doing anything like what I'm doing. And if you're going to have it, you have it on a ledger. Hold your Bitcoin. There's absolutely nothing wrong with it. Freddie, sorry if you talked about this, but why don't you use BlockFi or Celsius anymore? Do you feel they are risky, or is that you get more yield? Yeah, there's a massive, massive opportunity cost operating on those platforms. I'm not too much of a fan of the rehypothecation, albeit they probably do exactly what Aave does, and that's how they manage their business, and it makes sense. Over collateralized debt, they're lending, hopefully securely. Centralized organization is their prerogative, is their business. And I think Celsius and BlockFi are absolutely needed for the general public to get unfucked by banks, so to speak. So that's important and meaningful. Opportunity cost is the big one for me. Lewis is in the house. Hey, man, my brother. 61 in the stream. Can we do better? 70 people in the stream now, 34 likes. We can definitely do better. Lewis, do you have any general thoughts on Polkadot coming online, opening the doors? Yeah, I have Polkadot and Cosmos. It's just time horizon. So position size, because there's opportunity cost. If it takes another 6 months, year, 2 years for something magical to happen, it's a massive amount of opportunity cost letting that capital just sit around, fluctuating, depreciating, doing whatever the hell it's going to do. I have my positions because I have a very clear conviction for a time horizon of multiple years. It doesn't exist. And it's a fair amount of capital. I think I have like $150,000 between the two of them just sitting there. But that just gives you a sense of position sizing that I have to deal with and what I'm working with. That's relatively modest amount of capital in those assets, but they just sit there, and I'll let them sit there for the next couple of years. I also have other speculative plays. Plasm has a lot of potential on Polkadot. I did a lock drop back when Ethereum was like $200. Through 6 Ethereum into Plasm, their lock drop. Got a whole bunch of PLM tokens when Ethereum was $200. So I got 6 Ethereum that's locked for like the next 3 years. That's just. I'm gonna come back and Ethereum's gonna be like $100,000 in the next like 4 years, and be like, lock drop. Where's the Captain Weber? Captain Weber got in on that Plasm lock drop also. That was wonderful. Happy Bear, I have a basic Trezor, so I get a Ledger. Ledger is much more powerful. Albeit, if you're dealing with just holding Bitcoin cold storage, Trezor is going to work wonders. But if you really want to interact with the DeFi landscape using MetaMask and even directly on websites, many of them support it, Ledger is going to be much more functional. Anyway, let's wrap it up. 68 people in the stream, 36 likes. We can do better. I'm really sorry, guys. I've been horrible with office hours. I don't have the time. And I'm going to have even less time as of next Tuesday. I have a new position coming to me. And I'm sorry. I wish I could do better. And I always say that. Um, we can do better, and I really do wish I could help more, because it's really bad out there, and capital and banks are really it breaks my heart. Breaks my heart watching people get minus 15% a year on their money. It's a tragedy. There's no other way to look at it, and that's why I do what I do. And I wish I could do more. I'm always in the Discord server. We have fun. We have laughs. We share some pain, and we're always throwing up charts and talking about the market. I mean, I think that Discord server is just wonderful because I can't talk to everyone individually. I just don't have the time. But when you have a group, it's just a great experience. Uh, experiencing these markets together. So I really appreciate everyone in that Discord forum. I have a great time, and you all are turning into a bit of family at this point. Jason, got to advertise your show. I'll pull the Musk approach, and whatever happens happens. I just don't have the time, and I don't want to lay out the capital. So organic growth, baby, all the way. Uh, Ted, I really appreciate you, Noah. Thank you for being the balance of my degenerate gambling in the crypto space. I know. I know the feeling. It's been a minute now. I'm long overdue for another office hours cruise. My man. I know. I haven't even been enabling the system because I'm just swamped. Anyway, quantified. Thank you very much. 12:15 p.m. on a Tuesday. As always, thank everyone for joining. I will see you tomorrow. Peace.